In today's show, we're going to talk about the weekly charts in gold, in silver, in the GDXJ and the silver miners ETFs. There's some very important signals that we are getting on the weekly basis that we need to factor into our strategy to be successful in this very tricky market. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, Daniel Wilhelmi, Hot Trades of the Day chairman. Damn glad to meet you. If you know the quote of this movie, you have good movie taste. Well, it's the weekend, and you're watching this video, and you're looking at my face. So, I don't know what that tells me about your kinky weirdness. I'm just kidding. If that would be a kinky fetish, that would not be the worst thing in the world. But then on the other hand, I know the reputations about the Germans and the kinkiness. I've seen the South Park shows when I was in college. Believe me, I got to hear it, and I thought they were hilarious, by the way. Let's start with psychology, because enough of the German kinkiness. We don't want to make our therapists rich. We want to make ourselves rich in the market. And with that, it's not always only about execution and charts and fundamentals. A large part is behavioral finance psychology. We have two main emotions, greed and fear. We don't need to talk about the greed part. We know what's going on with that when we look at the semiconductors and the hardware stocks right now, especially what you hear out of South Korea, where people are getting out of their life insurances for their retirement and start buying the Kospi index. Yeah, that never ends well. That's kind of a really good contrarian short signal. So let's focus on the fear side. All right. There's a healthy amount of fear that's positive because it will prevent you from taking unnecessary risk and therefore unnecessary losses. And always remember, successful trading starts with avoiding catastrophic losses. This is important. I did not say avoiding losses because you will always have losses when you're trading. It's how you deal with the losses that will determine if you're going to be successful in trading or not. I know traders on Wall Street that have models where they have like a 35-ish% hit rate. But when they hit big. And the reason why the failure rate is so high is because they cut their losses rigorously. Now, again, on a different psychological level, probably not the healthiest thing to do to take that many hits, but as a trading strategy, it can work. I prefer a different strategy, but I just want to show you the success always starts with the losses. So a healthy amount of fear is good. Now, unhealthy amount of fear is bad because that paralyzes you. And I know this. I know what I'm talking about because I have had this before and I still have it. And one of the solutions that I created, because this is really an issue and a problem with a lot of people and retail investors in the market and leads to them missing out on rallies, is the fear paralyzes you and then you don't get in the market or you don't sell your losses, either one. But I'm more focused on the first one today, which is you don't open up the positions. You don't get in the market because the market turned a little bit or it's starting to change a little bit. You missed the first few percent and then you are like, I'm not getting any more. The fear paralyzes you. You're not pulling the trigger. So for example, I'm not kidding you. I told my beautiful girlfriend, I said, hey, if I tell you that I'm angry, that I don't want to talk, that I want to buy a stock, but it has gone up a little bit or it's turning around and I missed the beginning and I missed the big green candle, I want you to tell me the secret password. God damn, that sounds like we're bad at the kinky thing, but we're not. I'm promise. This password to basically hit me over the head with it and get me out of the fear paralyzed state. So we want to develop a strategy. We want to execute a strategy. Ideally by automation, because that way we completely take the emotions out. But that is the way how we fight and defeat the fear paralyzation. Doesn't have to be a password. Again, just developing a strategy, which is what we have done in the previous videos here at Hot Trades of the Day. And if you're saying, when is he starting to talk about the charts? Then you're not really getting the point, right? I don't really criticize people. Everybody should do their own thing in the market, but it's important to understand the psychology before we can talk about strategy. And then the charts are just telling us when and where to execute a strategy. So what has been our strategy for gold and the gold miners and silver and the silver miners? It has been, we gotta probably get in increments, not in a binary 100%, 0% level. The situation is just too complicated. Nobody can read it, right? And if you don't know what I'm talking about, hit the subscribe button so you don't miss these videos. Go back the last 2-3 gold videos and we can look into it. And if you look at the gold chart on the weekly, and here we are, finally, man, Schnitzel man, that took way too long. I get it. But again, psychology is important. I'm trying not only to look at the charts and tell you what I see, but also teach you a little bit so you don't make all the mistakes that I made. Look at this nice hammer candle that we build out. If you just look at this without, again, the FOMO of missing out, and therefore you want the market to go down on the weekly, you look at the gold chart and you say, this does not look terrible. It does not look great, but it doesn't look terrible. Higher lows, hammer candle. That's something we can work with. Uptrend is still intact, right? And that's the uptrend that started late last summer, fall. That ran all the way up. It's a daily uptrend, so that's why it doesn't hit it perfectly. But you'll see in the yellow chart when we get to the daily. Now, ideally, this is not what we would like to see. Ideally, we would like to see the washout. We talked about it, right? Let me switch to the daily because that makes it more clear. And hold on for a second. Here we go. So, yes, we tested the 200-day successfully. Also, another positive, we regained the 4,500 quickly, which again shows you how important this area is. And we really got this one right here at Hot Trades of the Day. I've been talking about this 4 weeks, if not at least a month. That 4,500, that's the line you need to watch. That's why we need to wait for the confirmation, because if you didn't wait for the confirmation and you got short right here, all right, you looked like a genius for about $50, $40, and now you're sitting on losses because the confirmation never came. Yeah, we went lower intraday, but didn't close lower, didn't close below this candle. So we got the 200 out of the way, but we never got that waterfall sell-off, like this sell-off right here, like with a nasty sell-off, which usually comes in Asian trading. I pointed this out in a previous video. And again, subscribe button, you get it now. That's where we need to be at, right? In order to understand what's going on in the gold market so you don't miss the videos. Nothing has changed much on the daily. We're still below the 50. The 50 is moving down, but you can see the down move is starting to lose steam because we kind of have been going sideways now, right? There's a big, I mean, we're basically where we were 2 months ago, 2.5 months ago. So the 50 days starting to lose some steam. That's good, but it's still coming down. And as you see in the day, we had an up move, hit the resistance zone, and then got sold off right away. So you see the big wick that's up here. And you see the big wicks in both directions, which again shows you there's major uncertainty in the market. Now, let me switch back to the weekly. But on the weekly, this is not a bad looking chart at all. So we need to factor in this, or one more sell-off down to the uptrend and the 50 weekly that purple line, that is absolutely possible, right? But I'm more worried than us going down to 3,500. I'm more worried that, hey, if we stop here, if this already was a low, and I don't think it is, and I'm not positioning myself for it to be, but it could be, right? This is not a bad looking consolidation structure overall. And I always say, look for structure, right? We want structure. This is a long enough consolidation where we're going to see structure before we're going to see major movement. So what happens if this is it and we start to rip and go up? Man, that would catch everybody off guard. Who do you know who's buying mining stocks right now except the hardcore mining junkies and this schnitzel clown right here? Nobody. And usually when that we have a black spot in the market, meaning that's what nobody has been done and nobody's doing, that's exactly where the market's going to go, because that's where the most demand is going to be. Right now, the most demand is on, I'm not sure if demand is the right word, but let me explain what I mean. I hope you get it. I apologize. Sometimes English, second language. I mean, I basically speak German, drunk German, and English, so it's probably the third language. So we see a bigger vacuum, let's try it this way, of gold and gold miners purchases. Then we see a vacuum of people on the short side, or people want to buy, but they're waiting for 4,000, or they're waiting for 3,500. The ultra bulls, we talked about it, right? So 4,000 right here, 3,500 here. So the black spot in the market is right now that gold and silver all of a sudden start to go higher. Is that probable? Yeah, but not a super high probability, but it's probable, and this weekly candle has improved the probability. So we want to be in some gold stocks, add to some positions or some gold just in case. And we might be early and we might have to take a hit of it. But you know what? That's a risk you have to be willing to take when you invest, especially in mining stocks. You have to be willing to be down 20%, 30% short to midterm in order then to make the 200, 300% on the upside. And now I'm hearing some of you say, yeah, but if I waited when the 20, 30% go down and then go in, then I can make 250% on the upside. Yes, I get it. I'm German, okay? Math, it's like born with us, right? The Italians, they're born with like amore, and they know how to love and talk to women. We're Germans. We know how to do math and build cars, and that's it. No love here. But you don't know if we're going to get down to these great price levels. And if we don't know anything, then we need to adjust our strategy. Because the worst thing is that we're not in it if the market turns now. Being down short-term 20 to 30% stings. It's annoying. It hurts the ego. There we are on the psychology level again, right? But that's an acceptable price to pay if you believe in gold going up long-term, and therefore the mining stocks going up long-term, like I do, in case the market turns now. So let's look at silver. We got to move this up. I'm talking way too much. Weekend edition. So with silver, first off, apology. As usual, we have the drunk higher, lower, highs, lows on the weekly. On the daily, they check out, right? Let me show you the daily so you know that I'm right. Here we go. See, on the daily, they're perfectly fine. But if we switch to the weekly, all of a sudden they're drunk. Okay, that's fine. We'll deal with the drunk waves. So silver doesn't look as good on the weekly as gold. You see it in the candle, right? Not the nice hammer candle, Red candle also. Uncertainty now for 2 weeks in a row, basically. But following this candle, which is a nasty sell-off candle, uncertainty, not terrible as a conclusion, right? So again, what does that tell us? If I would have told you we're going to get, or like 2 weeks ago, if I would have said, look at this candle, I would have not have fought you if you would have said, well, we're going to get a waterfall sell-off. Fair enough. Instead, we got indecision. We're basically sideways. We're kind of where we were 2 weeks ago. That's not bad. But again, we are fighting with the uptrend. If we get to the daily, man, I'm sorry. I have to switch because these candles are so narrow right now. We're fighting with a 50-day. That's even more important, right? Again, important lesson. What happened on Wednesday? We undercut it on the close. Yes, we made a new intraday low, but we did not close lower. We did not confirm the breakdown of the 50, so we cannot say it's broken down. Same thing here, by the way. Long sell-off after we broke the 50, uptrend, doinked right back up. Never confirmed the breakdown with a lower candle, lower close. Okay? Same thing. But again, overall, the structure is not bad at all, but it doesn't look great either. Gold looks better. And there's one thing that I want to point out that's quite interesting. And that is, yes, we made a higher high on the daily. Right? You clearly see it here. First high, second high. Much higher on the close, on the daily close. But we did not confirm it on the weekly level. So on the next higher time frame after the daily, we have not confirmed the higher high. You see this? This is below this high right here, this close. Then this is the candle, the weekly candle, where we had the higher daily close. But you see on the weekly, because we got a sell-off at the end of the week, we never confirmed it on the weekly. So that shows us that we are not clearly in a bullish setup for silver yet. So what does that mean? That means, again, in short-term weakness, we might want to build out our first positions in the miners if that's something that you're interested in. I'm not your financial advisor. I'm not telling you what to do, but it could be interesting. But overall, we don't have the signals yet on the daily or the weekly for silver to jump right into it and to buy aggressively. It might be over, but this chart setup on the weekly doesn't tell us it's definitely going to be over. So let's get into the mining stocks and let's look at GDX and GDXJ. And the interesting part is that especially GDX, it looks much, much better, as you can see, than gold. We're above the 50 weekly, and if we go to the daily, you can see, yeah, we're still below the daily, but this support zone and the 200 are holding up, and we're forming an interesting bottoming area. And I really want to show something to you. So, because I've had people tell me, well, I want to wait till the RSI is in the oversold territory, so below 30, like it was in March, at the lows in March. That is my signal to get in. Okay, well, let me show you this. If we go back to the beginning of 2025, and why are we using the beginning of 2025 on the RSI? I'm going to increase this for you to see. Because that is when the mining stock started to wake up. So if we start looking at here, then we see that we really only had two times when we were oversold. It's this time right here, which is the fall winter of 2024, when the institutions were pushing down the mining stocks to load up on them. And I remember I was telling you, watch the mining stocks. buy the mining stocks here and in the first quarter of 2025. We were on this early here on the channel. Again, hit the subscribe button if you missed it. And then obviously here, but this is the result of the Iran war uncertainty. So basically, in the beginning of the Iran war, we had this leg down, but then you can see we kind of stabilized because everybody thought it's going to be over quickly. And then when they realized it won't be, that's when we got the second sell-off. It's the only time we have been in the oversold category in the past year and a half. So what does that mean? That means really this area right here, that is the new oversold in the mining stocks. Because that area we have hit Liberation Day last year, fall sell-off, and now. So really in the gold miners, we have been reaching an oversold area as far like 2 weeks ago. Right? So this area runs around 40 to 40, let's say 40 to 42. And you can maybe go as far down as 38. That's why I started with 40. It's kind of the middle. That is the line in the RSI that you should mark if you want to use the RSI as investment in GDX. Because this is clearly showing us that is the new oversold area in the new mining stocks world with a new gold price above $4,000 an ounce. If you look at the reports of the gold miners, then you know, oh man, we're running real late on time. Okay, I need to finish this up. We're going to do another video about it in the next week. But the gold producers, I mean, they are basically stealing money. It's just unbelievable how much money they make. They're so profitable. It's a different world than it was in 2024, 2023. So it doesn't matter what the RSI was like back then. What matters, the right comparison is what happened since 2025 and 2026 when the gold price was higher and the producers, which is the GDX, made all the money. And that's what I just showed you. We have a higher new zone that indicates oversold, and that's around 40. So if we get below 40, that is when you need to start to pay attention and say, okay, on the RSI, this is oversold territory. If we go lower, even better, right? But what I'm trying to say is we may not have to go lower in the RSI for the GDX to build out structure and to go higher. Now, I gotta go. You guys spent 25 minutes looking at this face. I know it's time for therapy now, and have a great weekend. We see us on Monday. Bye-bye.